BLOCKCHANCE 2021.
Please help give a proper welcome to our guest moderator for the fireside chat, Sven Wagenknecht. Sven?
Thank you, Ollie, for the nice introduction. And now I'm really looking forward to the fireside chat with Raoul Pal because I have too many questions here in my hand I would like to ask him. Most of you will already know Raoul Pal as an international crypto expert, but before that, however, he had made a name for himself in the traditional financial world. As an ex-Goldman Sachs banker and hedge fund manager, he had already predicted the subprime mortgage crisis of 2008, for example. In the meantime, he has said goodbye to the Wall Street world of work and has dedicated himself mainly to knowledge transfer, which he promotes with his companies Real Vision and Global Macro Investor. He provides in-depth analysis of market developments and talks to other top investors on a daily basis. Accordingly, his opinion is in high demand. His enthusiasm for the crypto economy is quite impressive because once in an interview where he was asked about his asset allocation, he answered, "I'm 100% invested in crypto and I feel like I am underexposed." I think this is a really bold statement, and in that spirit, I'm really looking forward to see Raoul Pal here. I see the connection is there, and join me in welcoming Raoul Pal with a big applause.
Yeah, I'm ready for it. Let's
Ready.
do it.
Okay, great. So then I would like to say, let's start directly so that we don't lose any time. And the first topic I would like to talk about is a topic that affects us all. We read in the newspaper every day in the US, in Europe, and many other countries, it's the inflation, which is increasing month per month. And I would like to know, Raoul, how do you evaluate the relation or maybe correlation between the crypto market and the inflation?
So I think there's two types of inflation that we need to be aware of. One is this headline CPI-driven inflation that's being driven by supply chain constraints right now. That is different, and I don't think it really affects crypto markets per se. The inflation that drives crypto markets more so is the printing of money by central banks. And you can measure that by looking at the amount the central banks print and the effect it has on asset classes. It's actually highly correlated. And crypto does particularly well when the central banks are printing. Because of its limited supply, it has its scarcity value, and it tends to rise, but it also rises exponentially because it has this call option on the future element to it as we're building out this new technological world. So it works at two levels and works much better than most other asset classes for this debasement of currency that's happening.
And what if the central banks now are doing the tapering and raising the interest rate? Isn't it a risk for the crypto market?
I think over time, I'm not sure how fast the tapering is still an increase in balance sheet, but just less of an increase. So it's reducing the balance sheet that would start to cause problems. I don't think we're anywhere close to that yet. My actual base case hypothesis is that next year, this big rise in CPI prices, commodities, goods and services, actually slows growth down. In a very indebted world, if you raise prices on people, they tend to spend less, as do businesses. So I think we actually will see slower growth and less central bank tapering or reducing of stimulus. So I don't think that's next year's story. If it is, it's the back end of next year. In the meantime, I think we'll probably get a bit of a growth scare during the first half of 2022, and that should continue, I think, to support the crypto markets.
Okay, so the inflation is not temporary, or the devaluation of our fiat currencies is going on the next years. That's, I can assume. Oh.
Yeah, I mean, on average, it's the central banks, and I use the G4, the ECB, the BOJ, the Fed, and the Bank of China, People's Bank of China. Those on average are printing about 15% a year. Now, there's periods of time where they don't, and that tends to be not great for asset prices. and then what happens is they come back again. So I think it's an ongoing phenomena that will be with us for at least another decade because of this problem of debt and slow growth.
But then we all should try the Bitcoin strategy that Michael Saylor is doing with his company, or now El Salvador is doing with the nation. So making debt in the US dollar, for example, or the euro, and take the money from the debt and invest in Bitcoin. Is it a safe bet or too risky?
Look, there are no safe bets in this world, but if you look at the adoption rate of crypto right now, it is the fastest growing adoption of any technology in all recorded human history. Back in 1997, the internet was growing at 63% a year with 150 million users. Crypto has about the same number of users, and it's growing at 113% a year. So the network adoption of this entire digital asset space continues to grow. So not only is that the technological side, but if the central banks continue to print, the price should do particularly well. So, you know, generally speaking, I've switched 100% of my liquid net worth into the digital asset market. And there'll be times where I'll have less of a weighting, but right now it still seems the right weighting to have. You know, I've spoken to a lot of corporations about this, about, you know, why do they have stuff on their balance sheet? Why do the treasurers have cash? And when you ask them, it's really for a few things. One is to buy back their shares in the US. The other is to buy real estate, and the other is to buy other companies. And the problem is the debasement of fiat currency means that all of those things go up. Their own share price goes up, the cost of real estate goes up, and the other companies they want to acquire go up in value, and their cash doesn't, because they get 3% return on their cash. So trying to get people to shift and realize that if you want to keep up with the appreciation of assets with your cash, because everybody's income is staying roughly the same, they need to start making this shift. So yes, I totally agree that it's sensible. Just depends how much risk you want to take.
Okay, and as a part of this adoption, we see many investors who want to invest into the crypto scene or crypto market, but not via token or wallet. They prefer traditional regulated securities like the futures or the Bitcoin ETF now. And what's your take on this? Do you see more the chances via this traditional bridge, or do you see more risks that the state is, will come too much under control the crypto market under the state?
I think that the traditional methods of gaining access, particularly things like the Grayscale Trust or the futures market, have another risk, which is they trade at a premium or a discount to the underlying tokens. And I don't think people understand that risk. And I think it's a little bit unfair to force people to take that risk. Now, there is an ETN in Europe for Bitcoin. There's an ETF in the UK that just launched that holds Bitcoin spot. That's much better. I think regulation is going to meet us where we expect, which is going to allow people to do this. They're just trying to get comfortable. I mean, regulation is very far behind in the space. But, you know, countries like Switzerland, Singapore are leading the charge here. I think we'll see the same coming out of Dubai. And I think eventually Europe will start to figure out, okay, what is the right strategy here? And I don't think it's going to be about blocking access. It's going to allow people to understand what the risk is. Because a lot of this space is really like VC investing. Now, traditionally, unless you're a wealthier person, you're not allowed to invest in VC, which doesn't really wash in this day and age, particularly with a very skewed younger population from the millennials. They want access to attractive rewards with equity markets at all-time record valuations, property at record valuations, bond yields at all-time lows. Their opportunity set, and real estate super expensive, their opportunity set is very low to generate future returns. And crypto is the market that they really, really are interested in. So it's quite difficult for politicians to go against such a large group of voters. So it's really interesting. There's a battle to be fought about regulation, but I think a grand compromise will be reached that will keep everybody happy, allow KYC, AML, and all of the things that the state organizations need.
Okay, and what's your guess? When do we see a spot Bitcoin ETF in the US?
I think it comes out sometime next year. I mean, there's a lot of pressure on the regulators from everybody to say, listen, what you're actually doing with the futures ETF is increasing risk. So I do think we'll get there. Everybody's working really hard on it. My guess it happens next year. So I think we'll see probably an Ethereum futures ETF at some point, then a Bitcoin spot ETF, and then eventually a Ethereum ETF as well.
Okay, cool. So maybe let's stick to regulation or aspects of regulation. And we currently see tough regulation this year in all major countries to the crypto sector. And aren't you afraid that the states will regulate crypto innovations to death in order to keep control and maybe also to keep the banks safe?
They will try. And as I said before, it will be a battle that will not be finalized, probably in, let's say, till 2025, when we'll eventually have a set of digital asset laws as opposed to using the existing infrastructure. So there is going to be, I think, the feature of the second half of 2022 into 2023 will be regulatory uncertainty. Obviously, for institutions, it's relatively straightforward now. Most of them have an ability to buy Bitcoin and other things. The battle is for the retail market and the launch of the CBDCs out of the central banks. You know, Europe wants to get theirs launched whenever they can. The US is working on it, but is further behind. India is about to go. Singapore is about to go. Everybody's about to launch theirs. And what they want is to get everything in order while that happens, because what they're creating with the central bank digital currencies is not a competitor. They're creating the digital on-ramps and off-ramps. So they want to make sure that they capture what they need, which is their tax take, and to understand the KYC, AML elements. So I think DeFi's got a fight to come as well, because there's very limited KYC and AML, and that will be imposed in some way if you want to onboard and offboard via the central bank digital currency.
Okay, from the perspective of state regulation, I would like now to move to the banks. I mean, you're a former Goldman Sachs banker, and I would like to know what you think about the Wall Street, how they will come up to the topic of crypto in the next 2 or 3 years. What will we see there on Wall Street?
Well, you've got a double-edged sword going on here, a double play. One side, they're obviously in Washington trying to slow down crypto adoption because it's a very disruptive business model. They want to slow it down because on the other side, they're all building out digital asset groups. Goldman has built them out. JP Morgan will be building them out. All of the banks are building out digital asset groups. So don't listen to what they say, listen to what they do. They're building trading, sales, advisory, everything. So I think they're just trying to slow it down. I think the bigger issue is not for Wall Street, but for the main money center banks, whether it's in the US or Europe, where what do they really offer in this world? I mean, particularly in Europe, where the banking system largely doesn't really work. It's the inability to get money around the system. And DeFi offers a complete change there. So I can understand that Europe's a little bit nervous because of its own banking system. And the small money center banks in America, 20 years' time, they won't exist. There isn't a purpose for them. But the investment banks will be at the center of this, as always.
Okay, so you can imagine a coexistence between the banks and the DeFi protocols?
Yes, I think so. Because, you know, in the end, let's say you're a farmer in the middle of France or the middle of the US. You have a very distinct set of needs, and you need a relationship with a bank who can understand your needs. That may not be built into or buildable into DeFi, i.e. the relationship side of banking. So I do think they coexist, and the banking system adopts a lot of this, but does it in a way that helps onboard customers into it by pooling capital together and saying, we will help you integrate into this world. They will find their way of being the middlemen. They always do.
Okay, thanks. Now I would like to move to China. And there were the crypto ban this year. This was a big event, a very negative event for the crypto market. And do you think that the bans are only temporary? Because, I mean, China, we are in a competition. And if China not allows the decentralized application and so on, don't you see that it's a downfall for China maybe in the competition to become #1 economy in the world?
I think you're dead right. I think it's temporary. And the reason being is they're rolling out their central bank digital currency. So why do they want to stop all crypto activity while they're rolling it out? It's pretty straightforward. The central bank digital currency allows them to know where all of the money is in circulation. So what you need to do is bring all of the money back into the system where you can. So then once you reopen to crypto, you know the money's gone there and you can track it for taxation and other purposes. So I can see that happening. China also is trying to avoid capital flight. A lot of wealthy people have been using crypto for capital flight, but that still continues via Singapore. So it's still going on, but they're trying to slow that down. They wanted to get rid of the mining because mining was competing for uses of electricity and driving up electricity prices. You know, China's big aim is to keep to not allow social unrest. So what you really need to do is not allow prices to rise as much. So not to allow the miners to use the electricity was one of those. So I think it changes, and we've seen this with China a couple of times. They ban it, they change it, and then they reopen and allow it. And I think they will. I think they're not going to stop a technology like this where they can have an advantage for their firms as well.
Okay. And do you think, what's the biggest motivation for the state? I mean, control in China, I think, of course, but would you see that in the US and in Europe, we have the same motivations for central bank digital currencies, or do you think there are other reasons for?
I think central bank digital currencies are actually quite a breakthrough for many reasons, because we don't have monetary policy and fiscal policy is not very direct. You can't give it to people who need it, and there's always people in the middle. And that's particularly prevalent in the United States. With central bank digital currencies, you can exactly stimulate who you want. Let's say there's a huge flood in one part of Germany and people are homeless, and normally they might have to have a fiscal stimulus package, but now you could give money directly to those people only. So I think there's a lot of benefits. I think the central banks understand that the blockchain technology world is the future of the entire financial system and the digital world itself, and they need to integrate with it for the modern age, for speed of transactions, cheaper transactions. They're trying to increase velocity of money. So I think there's a number of reasons why they're still interested in this. I think it's also going to help them with their tax take and less leakage out of the tax system, because cash has more leakage than anything. So I think for them, it actually suits them. It'll increase their tax take, increase velocity of money, and increase the ability to stimulate their economies.
And with regard to the central banks, what do you think? Do we see first the digital euro or the digital US dollar from the central banks? Who will be first?
I think the digital euro, you know, if we listen to Benoit Cœuré and a few others who've been working on this, if you listen to what the BIS have been talking about, it looks like Europe will be before the US. The US seems to be later. The issue in Europe, they still haven't decided, is it going to be a private sector initiative or a public sector initiative? Singapore took that decision and decided that the central bank is not in the technology business, and therefore it should partner with the private sector. Europe's clearly not made that decision yet, but there's no way the ECB can hire blockchain developers. They're just never going to work for them. So they're going to have to work with the private sector. So it's still quite a few years away, I think, but they'll test stuff out first.
Okay, thanks. And now I would like to turn to a hype topic right now that could massively change all our lives in the long term, and it's the metaverse. I think that's the biggest thing right now in the news. Every day there are some other companies who are moving into the metaverse. And short question, Raoul, are you afraid of the metaverse?
I hold two thoughts in my head. One is the optimistic thought of the metaverse, which is the ability, I mean, look what we're doing now. I'm in the Cayman Islands, you're in Germany, I'm seeing a digital representation of you, and it feels very natural, and we're used to it. The sound is digitized. I don't know what computer you're on. All of these things work. That's part of the metaverse, the digitization of everything. And that's great, because I didn't have to get on a plane to come to see you today. Even though it would have been lovely to be there, but look at the ease that this has created, the ability to connect with people in a meaningful way that wasn't available with just a phone call. I also think the metaverse offers entirely new opportunities to create revenue, and we're not constrained by the resources that are on planet Earth. the metaverse exists beyond that because it's just digital resources. And the digitalization of everything tends to trend the cost of everything down to zero. So it's going to open the ability to level the playing field globally. You know, a smart kid who's, let's say, in Tanzania gets the same access to education as somebody in London, Stuttgart, New York, because education will go into the metaverse. And then you can then mix with other kids of different backgrounds, different cultures, without the prohibitive costs of having to move to the United States to become a student. You know, there are so many opportunities that we can't get our heads around. But we're all still too focused on the Ready Player One world, this dystopian world where somebody owns the one metaverse experience. That's not what the metaverse is at all. The metaverse is where the majority of our lives become digital, and we create these unique experiences that may be virtual reality, augmented reality, or just 3D, or just digital representations. And we're seeing that creeping into our lives every day. But because it happens incrementally, we don't realize it. And, you know, in a couple of years' time, we'll have augmented reality maps on our iPhone, and we'll be using that, and we won't be thinking, oh, this is the metaverse, but it is. When I get in my Tesla, that's essentially the metaverse. It's a car entirely run digitally now, and that's an extraordinary thing. And as it goes around, it is recording how I drive, where I go, the state of the roads, everything, and putting that back into the AI that drives that. Once you add augmented reality, you'll be able to drive down a street and it'll tell you who lives there, what's going on, anything, you know, all of these things. So I'm hugely optimistic, but it will get used for nefarious aims too. You know, we need experiences in the metaverse that aren't about controlling our data. And that is what people are fearing from Facebook. I think everybody understands this, and the technology is being built out to have, let's say, digital identity that has zero knowledge proofs on it. So we don't have to reveal who we are, but we can confirm who we are. So we can operate and move around these digital nation states, essentially. And we're free to leave one and go to another. So, and that's a big thing here. It's not like we're trapped in the Facebook's meta. We're actually free to move around.
Okay, and what do you think is currently the biggest misconception that can be made to the metaverse? I mean, it's at the very beginning we see games who are labeled as metaverse, and I mean, how far are we away from the real metaverse you're talking about? Is it 5 years, 10 years, 15, 20 years?
I think it's like saying, how far are we away from the internet? It's not a concept because it's an ever-evolving thing. How far are we away from AR being augmented reality being a large part of our lives? I would say 3 years.
Wow.
So in 3 years, Apple will have launched a full suite of AR maps, and we will start building on AR much like we do on the internet. VR, obviously, we've got incredibly high rendition worlds, and you can exercise there, you can meet people, you can set up your own office, all of these things. The problem is nobody wants to have a VR headset because it's actually difficult to integrate into the physical world. But that will change too. So if your VR headset allows you to still see around you, because it's actually really disorientating, but if you can still see the room you're in, well, that's not very far away. So I think we're in this exponential age where we think linearly, but what happens is everything moves much faster. So I think if we were to sit back here on this stage in 5 years' time and look back at our conversation, we'll be going, wow, that happened faster than I thought.
Wow. And part of the metaverse are the NFTs. It started all with some JPEG images, very simple, with some music. Now we are seeing fashion, gaming, of course. And I would like to know, what are your favorite NFTs, or where do you see the most potential in the next month or 1 or 2 years?
Yeah, so I'm not an investor in NFTs per se. I think the technology is amazing. This is basically the ability to tokenize everything. So I think we will see tokenized real estate rise. I think we will see all ticketing move to NFTs. We're obviously seeing digital art because that was an easy place to start. Digitalization of IP rights, I think we'll see that. Music rights, music. I think that a lot of industries will adopt NFTs. I think NFTs can work for the insurance industry. They can work for a number of things. So the technology itself, we're only just scratching at the surface of what we can do with a non-fungible token. And it's basically a unique identifier digitally for something. And if that thing, any unique contract can be put into an NFT. So we may get a big boom bust in the current kind of NFT, Bored Ape Yacht Club, CryptoPunks kind of world where everybody thinks they want to join this community. Let's see what most of those communities do. My guess is nothing. But out of this will come something huge, bigger than we can imagine.
Okay, but now we have a lack of a legal framework. So rights are not getting transferred via NFTs, like image rights, for example. Don't you see that we need, first of all, a legislation for the NFTs that they can gain more sustainable value and not having maybe a big bubble in the next month?
Yes, look, we will have a bubble because it's a very speculative retail, non-institutional side of the market. So that equates to bubble. Everyone's hyper excited. But you're right about the legal construct. Usually what happens in these kinds of things with IP rights, it'll be a country like the Cayman Islands or one of these neutral jurisdictions that will have to start adapting IP laws to deal with this so people have a globalized IP architecture. Because if you have to go down to single country level architecture, it's actually quite difficult because the EU has a different architecture to the US, than Singapore, than Dubai, than Japan. So I think it's going to be probably led by a country like the Cayman Islands or Singapore, whoever makes the first mover advantage on deciding how does IP work in this new world.
Okay, let's move from the NFTs to the general or whole crypto market. And I would like to know how big the crypto sector can get in the next few years. I mean, you already compared it to the internet, and we have right now a market capitalization of 2.5 trillion in the market. That's like Apple or Microsoft. So it's not so much for a whole asset class. So what do you think where we can get in the next 1 or 2 years?
Yeah, so I referred before about the exponential growth in adoption. It's the fastest growth in history. We're currently at 150 million users. If we continue to extrapolate the growth rate, in fact, slow it down from 113 down to 83%, so knock it down by 20% or so, 30%, we get to 1 billion users by 2024. That's the nature of exponential trends. And 3.5 billion by the end of the decade. So if I then look and say, okay, if we're digitizing everything, and the digital asset space is essentially the digitalization of value, that includes the securities markets. How big are they? So equities are about 250 trillion, 300 trillion. Global real estate's 350 trillion. Global bonds about 250 trillion. So if digital assets are truly the disruptive new asset class that basically absorbs all of those over time, is it so much to say that they could be worth 250 trillion? So that's 100x in market cap. So we will have never seen in human history an entire asset class grow in size by 100x in, I think, 10 years.
Okay, and when you look at the crypto market or even Bitcoin directly, what are the most important technical indicators for you to evaluate the market situation?
So I look at log charts to give me a sense of trend. It's very important not to use linear charts because it keeps doing this and going up and down. But log charts are perfect to understand the most important thing, which is Metcalfe's law, which is network adoption is how you price cryptocurrencies, much like how you price Facebook, Google, and others. So Metcalfe's law is basically the number of nodes on a network and the interconnection between them. So you're basically looking how many people are using this, how many people are invested in it, how many people are using it, and what's the activity going on. That is the single most important thing, and you can estimate that, and that will give you trend. So I think trends of adoption are the single most important thing to look at. A nice logarithmic chart pretty much sums it up. Then after that, I will use on-chain analysis to try and see, okay, where are the tokens moving, who's holding them, what is the growth in wallet addresses, and it's basically all the same thing. It's different ways of looking at the adoption. So those are the key things for me.
And a few weeks ago, a quote from you made the rounds in the crypto sector. I can remember we had an article in our magazine, and the question was if we will see a year-end rally or not, and how far the prices can go in this cycle. And you said the markets will go down the path of greatest pain. I mean, does it mean that we are all masochists, or how we can explain that?
When I say greatest pain is the general, we're not talking about the general investors now who already have tokens. That would be the sell-off. But there's not a lot of pain from a sell-off because most of us are in it for the long run, interestingly. So you get a bit of leverage washout from Asian leverage traders, etc. The pain is the fact that every institution is allocating and wanting to allocate. Many of them have the mandate, but institutions tend to do things on a quarterly or annualized basis. So they're all waiting for their 2022 allocations from their investment committees. And, the worst thing for them is to see the market squeeze higher and higher in front of them. Also, a lot of hedge funds, for example, tend to, and the institutions tend to rebalance at the end of the year. Hedge funds will often close their portfolio because they start again in the new year with a new P&L. So the hard thing for them is if the market goes up in the last 2 months of the year and they're not participating. It's that kind of pain. I think the pain is to the upside because everybody is short the call option, as I say. They haven't bought enough of it and they know it, but they need to get round to it. So more pain is higher markets.
Okay, and getting more concrete, maybe with Bitcoin, the big question here, I think, in the audience too, is when do we see the 100K Bitcoin in US dollars?
I think we'll see that. I think by end of year.
This year.
This year.
Wow. Okay. That's great. That's bullish. Let's go. We'll off. And then I can continue with Ethereum when we are right there at the point.
Yeah, I mean, I think Ethereum goes over 10,000 this year.
Wow.
But it was following very historic chart patterns. It's starting to deviate a little bit, so it's been a bit slow where it currently is. Same with Bitcoin, but I still think that generally at this historic points in these crypto bull markets, this December period tends to be extremely strong. I don't see any reason why it should be different. There might be some tax-based selling in the US and other bits and pieces, but I don't see a reason that it'll be wrong. And if it is wrong, it probably happens in Jan, Feb, March anyway. So it's like, does it happen in this last month or does it get pushed out a couple of months? Either way, it doesn't really matter because the year end doesn't matter to any of us, but that's the point. Although it matters to me because I own some Ethereum call options that expire at year end, so I need it to go.
Well, and what do you think about that Ethereum moves to staking? What's the influence maybe on the price too? Can you give us your take on it?
I think Ethereum ecosystem is a faster growing, deeper, richer ecosystem than Bitcoin is. So Ethereum is a very important part of this whole ecosystem. The move towards ETH 2.0 is a huge step in the right direction of the ability to stake and get yield. So it's creating a money market and a yield curve around Ethereum that doesn't involve DeFi. That's super interesting. And, it'll become quite a deflationary asset. So what we're going to see is probably a lot of people staking, which we're seeing, all of these coins coming off exchanges, being staked, locked up in DeFi, locked up in NFTs, locked up elsewhere. And that means there's very little supply. There's about 11% of all Ethereum is available on exchanges to buy. So you put an institutional demand in the middle of that and there's not enough Ethereum. So the probability is the price rises all the way into ETH 2.0, whenever that is, somewhere between March and June. And then we've got this unique situation where everybody who's staked is still locked in for a period of time, but the rest of us know they're all going to be sellers after it. because they want to release some of their capital. So the market will front run that because the market likes pain. So if you're locked in your DeFi contract, in your staking contract, the market will front run your selling and you'll be selling at lower prices. But from what level? That's the question. And my guess is that level is more likely to be 20,000 than 4,500.
Okay, and what do you think about the competitors, the smart contract competitors? Do you think like Solana, Polkadot, Cardano, and so on, they can beat Ethereum in the long run, or do you think the game is already, the decision is there, and Ethereum will be the #1 smart contract platform for the next years, for sure?
I have no idea, and I think people worry too much about this. All I do know is the size of the pie is increasing 100x. So if Bitcoin's dominance goes down and Ethereum's dominance goes down and Solana's dominance goes up, they're all going up in price, which is interesting. So we're aware of the trade-offs. The trade-offs are less decentralization equals faster blockchains. So that's basically the trade-off. And so people will take their choices. And so I think there's room for all. Now, I think over time, there'll be different adaptations and different chains will become larger that we aren't aware of right now, or maybe Solana does. The point is, I don't know. And that's why we need to have diversified portfolios in the space, keep an open mind, look at these network effects, who's getting adoption. Right now, it's very clear that the 3 tokens, layer 1s getting adoption are Solana, Luna, Terra Luna, and Avalanche. And you'd probably say the Binance chain as well. So those 4 have seen huge adoption, but they're coming from a lower base. So you tend to get faster price rises coming out of them as well.
The predictions you made are very bullish. And my question is, what are the risks in the market that keep the market down and not that we are seeing these all-time highs?
I think the risk is that the rate of adoption slows. Maybe because we're all in the middle of this world, we think everybody's excited about it, and maybe people just come into the space slower than we imagine. And then people are probably excess positioned for that. So we'll get down and sideways markets. But let's be clear, Bitcoin has basically gone nowhere since March. We've had a whole sideways year so far. And Ethereum's had a much better year, but it's basically been sideways for the last 6 months. So, we've kind of had that year where things have been slower than expected. So I don't see regulation at some points will cause some issues, but I don't really have a fear for the space. It's too mature now. Yes, we'll go through booms and busts, but there's nothing exponential. I think we've gone through the Lindy curve moments of testing, is this going to survive as a technology or not?
Okay, and what was other risks like Tether, for example, external risks as well?
So I just don't see Tether as a big risk because risks that are totally known are understood by the market. And I don't see, much like the Chinese miners, everyone's like, oh my God, the Chinese miners are going. This is the end of the world. What happened is everyone just migrated. So if Tether has problems that people think is an issue, they will just migrate. And we're seeing the rise of other stablecoins doing well. So I don't really have an issue with that. The strongest survive and the weakest fail. And the market will adjust to that. Okay,
now we are coming to an end. And maybe one last advice from you. What advice can you give our audience here today to navigate successfully through the crypto market? What is it?
The most important thing is to zoom out. Use those long-term logarithmic charts. Filter down the noise, the excitement. Check yourself in how you feel emotionally and express yourself emotionally about price rises and price falls, because you're in this for the long haul. This is something, if it's going up 100x in market cap, and there's going to be 3 billion people adopting it by the end of the decade, you have to stay in the trade. You have to stay in the thing and keep an open mind. You asked the question about, what's going to happen? Is one of these layer ones going to beat Ethereum? The answer to everything is, I don't know. And everybody has to be intellectually honest with themselves, is you do not know. So if you keep an open mind, look at the network adoption effects, zoom out, and enjoy the biggest disruption that we have ever lived through in the financial markets and global business models, and embrace it. There's opportunity everywhere here. Just keep your eyes open.
Well, those were great last words. Thank you so much for your yes. You deserve the big applause. You deserved it, really. Great. Yeah. I think we all learned a lot. I learned a lot today. I think our audience learned a lot about your valuable insights. It was very enriching. Thank you so much. It was awesome. And I would like, have a good start into the day in Cayman Islands. And
thank you very much. And you all have a great weekend.
We will have. Thank
all
you.
right.
Thank you so much.
Thanks very much.
Thank you.
Thank you.
BLOCKCHANCE 2021.